Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, the S&P and the QQQs hitting brand new all-time highs. However, depending what you were invested today, you either had a really good day or a really bad day. The rotation was kind of all over the place, and we'll talk about that, of course, in today's video. Some of the reasons for the volatility, number one, of course, is the government shutdown, now well underway into its first day. The stalemate is said to last at least 3 days. We actually have some historical statistics to determine what's the average duration of a government shutdown and what do the markets do during that time. If we take a look right here, since 1976, there have been many government shutdowns. The average S&P 500 return during a shutdown is about 0%. A lot of the negative performance was back in the 1970s and early 1980s. If you take a look at the last 5 events since 1995, they have all generated positive returns during the government shutdown. That being said, one thing is for sure, in the week after the government shutdown, you will actually see some positive returns here on the average, right, of about 0.6%. Now that is going all the way back from 1976, and the average duration of the government shutdown is about 8 days. So obviously, every single one of these is different. It does represent a small volatility catalyst, but I do not believe it will result in a massive correction in the S&P and or the QQQs. In other news today, we had some economic data coming out, which of course was the ADP private employment change. As you can see right here, the consensus was to add 50,000 jobs to the private sector. Sadly, this came in negative at minus 32,000. Now, initially this morning, the market had a quite negative reaction to it. However, it did put a point in favor of the rate cut odds, right? That being said, the Federal Reserve is supposed to cut rates 2 more times by the end of 2025. But now, what was supposed to be a possible 0.25% interest rate cut in October, probabilities are now saying it might just be closer to a 50 as the Fed tries to manage the risks, of course. That being said, in terms of historical standards, you will see that this is the 3rd time this year that the jobs report has gone negative. Once back in July, where we lost 23,000 jobs, once last month, where we lost 3,000 jobs, and now this time, 32,000 jobs. As you can see, there is a trend of job weakness, which is exactly what Jerome Powell was talking about a few weeks ago and was the catalyst that actually led the Fed to cut interest rates. However, if you take a look here from 2011 all the way through 2019, 2020, you will actually see that in the context of many bull markets and a very good economy, we actually had this report also kind of going all over the place sometimes. You could kind of dumb this down to some seasonality. You could dumb it down to some certain structural changes at the time. But one thing's for sure, guys, right? Unless we go deep negative and unless it really starts affecting the unemployment rate, as of right now, there just isn't enough data, but we will keep monitoring it closely. As we know, the balance of risks is now shifting from inflation over to the jobs market. So we'll see exactly what happens with this in the near-term future as we get more and more of these reports. But as of right now, we're not hearing about massive layoffs. Once again, it remains a no hiring, but a no firing economy as well. So the labor market is very tight. So in today's video, guys, we have a lot of things to talk about. Number one, we will be talking about our technical analysis on all of the indexes because some performed very well today, whereas others were severely lagging behind. So we'll take a look at the rotation. Where is the money going into? And is there possibly any plays that we can make? Number two, we'll be doing the same thing across our big tech list down here because even in big tech, guys, some names are performing really well, but other names are being left behind. And I do believe there are some quite attractive opportunities right now in a few of these names on this big tech list. At the end of the video, we'll be taking a look at our biggest gainers and losers of the day, of which there were a lot today, right? A lot of names down 3, 4, 5, 6, 7, 8, 9, 10%. And to the flip side, on the green, we had a lot of names pushing very, very high. Now, that being said, we know in this market, we're not in the business of chasing names. So some of these, I'll bring up the daily and weekly charts and show you where I might be willing to play them if we do have some pullbacks. And that'll be it for today's video, guys. This is actually going to be the last video of the week because tomorrow morning, I have a flight to catch. So sadly, I will not be able to film the Thursday market recap. Speaking about filming, by the way, I realized that these videos, at least for the past week and a half, have been coming out a bit later than usual, right? You might remember when I started the holiday season, essentially for me, traveling overseas. I always film these videos at the exact same time, guys. About 8, 9 in the morning in Asia, which is about 8, 9 at night for you guys in terms of Eastern Standard Time. They used to be put out by YouTube at around 10, 10:30 at the max. However, for some reason, YouTube's been delaying my processing, and I realize the videos now are coming out like midnight, 1 a.m. Eastern. I apologize. I've sent them an email. I do not know why the processing times are longer than usual, but hopefully when I change locations tomorrow, I'm going to Bali. Hopefully the IP change or something of that nature maybe will give me better processing times. I don't know, but I do apologize for the videos coming out later than usual, and I thank you guys for your understanding in terms of that. But without further ado, guys, let's jump right into today's video, shall we? So SPY up 0.34, the Q's up 0.48, but as you can see from this heat map right here, not everything was having a good day today. Big tech had a decent day, except for Meta and Netflix, which are down about 2.3% each. Software, disaster of a day again, but we did have some really good performance here in a lot of semiconductor names, especially the equipment manufacturers. Look at these names: LRCX, AMAT, KLAC, Teradyne as well, and even ASML, which is not on this list. Financials, very mixed bag, right? The insurance companies, the investment banks, and even your traditional legacy banks down very decent amounts. However, Visa and MasterCard pushing higher. In terms of healthcare, it was another very strong day for healthcare, led once again by the pharmaceutical companies because of the headlines that we talked about yesterday, the new Trump RX site for discounted drugs. The bullishness continues in the healthcare sector, and it's much needed because that sector was lagging behind for a very long time. And I'm happy to say that we are currently crushing it in our healthcare positions after having built them for the past few weeks and months. The bottom half of the market somewhat flat, as well as the interest rates and the longer term yields today did move down because of that jobs report. However, did not necessarily translate into gains in the bottom half of the market. That being said, take a look at the one-day relative performance. You can see how staggered the market was today. Healthcare really lifting everybody up in terms of the S&P. Technology, utilities, and cyclicals not performing too poorly. To the downside, defensives, communication services, which was largely Google, Meta, and Netflix, and financials taking a bit of a bath to the downside on the 1 week relative as we stand at the all-time highs right now. Most of our major sectors are higher, but still lagging behind communication services, energy, financials, and defensives again. And on the 1 month relative, as I'll remind you, we just closed the month of September. I don't have to remind you, but still, it's always nice to check this one into a new month. Everything higher except for consumer defensives. Consumer defensives could be a decent little carry trade in terms of just some rotation that we might be able to see into this Q4 season. So in terms of the technicals, guys, because we don't have any earnings to cover today, we'll just jump right into the charts. And the charts are really not looking too bad at all. The SPY currently still in a very healthy daily uptrend, and so far nothing has changed, right? We still have a very clean daily uptrend from the bulls right now, and I'll remind you, still any pullbacks will be looking for a new daily higher low. At this point, the line in the sand is still 654.28. The bulls working with a lot of space. And for some of you guys that expect this government shutdown to maybe be bearish for the markets, in the event that you unwind this entire move, I'll remind you what you're looking for here, guys. Just some very solid weekly consolidation could bring us right back down into the current support level, 650 down to 647, which I'll remind you is also the 12 EMA on the weekly chart. So the bulls working with a lot of space, and I wouldn't be surprised if the bull market simply continues at this current stage. No red flags for me. Moving on to the QQQs right now. The QQQs largely the exact same thing, right? Beautiful daily uptrend on the charts right now, looking extremely solid, and the daily higher lows are still planted down here at about 588. In the event that you do not crack above these highs, and for some which reason crack below the lows, I'll remind you again what we're looking for here. Just looking for some very simple weekly consolidation, which would be very healthy for the markets. You're going to need all sectors, though, to drop because as of right now, the rotation is very healthy. 581 down to 575 is the current support level, and that is also in line with the 12 EMA. So as of right now, guys, no red flags, and also these shorter term timeframes are not really overbought. Daily RSI not overbought, and the weekly RSI not overbought either. Moving into financials right now, financials actually down 0.89%. A lot of that had to do with the banks, but we know that financials haven't really been doing anything for a better part of the last month. There is some nice rotation across different names in financials. The weekly time frames, though, still in the bulls camp. 52.88 is line in the sand on the weekly time frame, back testing a nice support level right here, and the weekly 12 EMA. And I'll be looking for maybe some pullbacks in some of my favorite names in banking right now. If JP Morgan can make its way back to $300, might be good for a swing trade. And the same thing can be said about Goldman Sachs. Goldman Sachs makes its way back under 750. It might just be a very nice breakout retest and possibly run trade for another leg of action on financials. Obviously, you guys know which name I've been playing the most. That has been Visa, and Visa currently now embarking on a bit of a breakout cycle. So we will see, can they get it done? Can they break the downtrend, right? We will see, but it's not looking too bad for now. Still a very nice opportunity in my mind. Moving on to healthcare right now, look at the breakout by healthcare. Fantastic break by healthcare bulls. Of course, now the daily bulls looking very good. If we get any declines here, guys, I'll just remind you what's the expected result. You're going to be looking for a daily higher low for possible further trend continuation. And in terms of the weekly chart, looking really strong for some pattern continuation up here into the 145 all the way up to 148, which I'll remind you is pretty steep resistance all the way up here. For any swing trades built down there in the lower levels, this is take profit area number 1. And then, of course, take profit area number 2 would be your all-time high. So congratulations to everybody who was with me on the channel buying these dips after saying that it was just a question of time, right? They do not backtest the 50-month EMA too often. 4 times in the last 15 years. Every single time has resulted in a very nice buying opportunity if you are able to be patient and hold and see it through. Moving on to semiconductors right now. Semiconductors not performing poorly at all today, up 2.25%. And a lot of that had to do with NVIDIA's gains, number one, Broadcom's, but also a lot of other components, right? The equipment manufacturers and some of the other names such as Micron, AMD, and Intel playing along too. So fantastic continuation of the breakout by semiconductors right now, looking very strong, daily uptrend, but we are clipping into the highs of the RSI right now, 81 on the daily RSI for semiconductors. It's getting a little extended, but the daily higher lows are still down here, 313.58. Any pullback looking for a new higher low for further trend continuation, right? So no weekly consolidation just yet. No, that was back here. And we were saying that playing this consolidation was a very nice area to accumulate some possible positions. Here, all the way down through there, if they did break down into it, looking for the monthly retracement, right? So we were able to get half of our positions in this level, and now they're breaking out nicely to the upside, looking very strong for continuation. However, if we get a pullback, I'll remind you, the bulls are in full control and working with a ton of space on the weekly. You would just be expecting a weekly higher low for possible trend continuation, but there's a lot of rotation, man. A lot of rotation in semiconductors, and still so many names that haven't ran. Texas Instruments, which is a big weight in the index, that hasn't done anything. Qualcomm, decent weight in the index as well. That hasn't done anything. And NVIDIA is just literally breaking out now. So that's why I say, since there's some healthy rotation within semiconductors, it may not be over just yet. Moving into the Russell right now, the Russell up 0.22%, possibly because rates were down a little bit today. Now, the daily time frame is a little bit choppy, but one thing's for sure, the daily higher lows are right down there. Call it about 237. So no new highs. If you do roll this over, if there's a risk off movement because of the government shutdown or something like that, I'll remind you the cleanest time frame, in my opinion, is still the weekly time frame, looking for a higher low. Possibly just looking to backtest this area, 232 to 226. It's a big area, guys. That was the previous all-time highs from all the way back there. It is also your weekly EMAs. Not a bad location to possibly be building some swing trades if it does come down into our laps in that area down there. The VIX and the yields, we're not going to talk about too much because they didn't really move that much today, nor did bonds. So we'll cover them perhaps into early next week. If we're talking about gold, gold is literally the same thing that we've been saying this entire week so far. Phenomenal breakout by gold, guys. Beautiful daily uptrend, but it's just really hard to touch up here. The daily timeframes are super overbought on the RSI. The weekly timeframes as well are also getting very overbought on the RSI. The monthly timeframe is now above 90 on the RSI, which has not happened since 1979. A 90 RSI, guys. So on every single timeframe, gold is very overbought. We know they closed a super solid monthly candle. They may be looking to complete the the move essentially all the way up to about 4,000 psychological, and maybe then we find them to get a little bit tired for some pullbacks. That being said, a lot of space for a pullback even from here. Anything above 37.18, looking for a new higher low for possible further trend continuation. So we can play the swings, but we got to play the swings with some stop losses below our daily higher lows, and we got to wait for the pullbacks down into perhaps the 12 EMA. That way we can get a better level for an entry, we can get a better stop loss area, a tighter stop, and then we're looking for the next leg of expansion, which should be the 4,000 target. So we'll keep a close eye on gold over the next coming days and see what happens with this trade, but it's been very strong. Moving into Bitcoin right now, let me just move myself over as a matter of fact. Bitcoin, not a bad day in the markets at all. 4%, huge candle on Bitcoin right now, challenging our resistance area, 120 all the way down to about 117. We were commenting that the bulls were looking really good, having a nice daily downtrend into an engulfing move, and we were looking for the follow through and the completion. We had a bullish leaning bias because of the monthly timeframes, of course. It has always been a monthly timeframe. And these back tests of that whole 107 area were a really nice opportunity to enter, whether you were using Bitcoin, whether you're using MSTR as a proxy or anything of that nature. I was buying down here and selling put options, and now looking really good possibly for the leg of expansion. Even if it doesn't happen right away, in the event we have to get sent back down a little bit, I want you guys to realize one thing, right? Weekly downtrend for about 2 months. Now the bulls are trying to reset the pattern, and if you complete this in terms of the weekly candle right now, in terms of this structure for the weekly uptrend recapture, you are going for possibly the next leg of monthly upside. Of course, the next target to the upside will be the 125 psychological number, and then possibly moving to 130, but Bitcoin looking really strong. And Ethereum as well, starting to show a couple signs of life. Ethereum was a big daily downtrend, perfectly backtested our area of support that we were watching out for, 4,000 down to about 3,700. It was a weekly downtrend and is still a weekly downtrend, but the bulls are putting in some really good candle patterns here in the most recent few days. So we will see, do they have it in them to change the daily uptrend, or will they just get sent right back down for another leg of consolidation in the 3,700 area? Not looking too bad. Any positions built on Ethereum down here can indeed be held, and in the event that we come back down there again, it could be an also decent time to add a couple more positions. Is it a bad time now? No, but if you add here, you may as well be willing to DCA if it does come down there and give us the full pattern completion. I'll remind you what we're going for here on ETH. You're literally just going for the monthly higher lows for a possible next leg higher that might carry you into the good old 5,000 area. And now let's move into big tech. So talking about Apple right now, Apple for me is still a no trade in this location right now. Although the bulls are not looking too bad, the daily higher lows are 251 right now. In the event you break those to the downside, you know what we're looking for here, guys. You're just looking for a new weekly higher low. The chart is looking pretty good, but we are extended towards the all-time highs of about 260 right now, which is why for me, it's not a trade location. The last two trade locations were either down here or possibly here as well. As of right now, pattern completion into the highs could be a decent take profit location, maybe not one to start some new swing trade longs. Although Apple has been doing very good recently and has some very good iPhone 17 sales and all the other products that they put out just a few weeks ago. So Apple looking very strong, but tough to position all the way up here. Now, moving into AMD. AMD is starting to come alive a little bit. Still trapped in the confines of resistance, 171 down to about 157. Big accumulation zone right here, guys. For the past 3 weeks, we haven't really been doing anything. You can see us getting really tight here on the weekly time frames, and we were talking about this, right? It was a very nice weekly uptrend this entire time. This was just looking for a weekly higher low. We didn't quite make it back down to under 150, a support, which was like 147 down to 134. Which was the big level that we were paying attention to. However, we got very close, and now it seems like the bulls want to take charge again. This is a very decent candle close. We will see. Can we break above the level that's been stopping us out here for a few weeks in a row? 165. You get the break. It's looking really good for a nice new daily uptrend, an end to your weekly consolidation. And it's been a while, right? And you might just be looking for the infamous rally higher by AMD bulls. In terms of the monthly, I'll remind you what we were looking for is a cup and handle pattern formation. Usually these have some pretty good pattern follow through probabilities, about 75-80%. And the fundamentals of the business line up for the breakout as well. AMD stock around 150s was trading really cheap, great revenue, great EPS growth. So I really like this one. It's probably one of my favorite semiconductor plays for a possible next stage rally higher. Moving on to Amazon right now. Amazon up 0.48%, but we know this one is still relatively weak. Now, the line in the sand level was not broken, 216.68. They tried it today, couldn't get it done, right? We have been in this daily downtrend, and the expectation was indeed for possible follow through to the downside. If you do get that follow through to the downside over the next few days, you're coming right down here, 213 down to 206, which in my opinion is a great location to either be selling put options or maybe be preparing to buy some shares as well for the long-term portfolios. We know Amazon's been lagging behind a lot, not only this year, but also in relation to the last 5 years in the market. Still, all of Amazon's lines of business are firing on full cylinders. I think this is one of the last great opportunities in big tech. We used to have some nice opportunities on Apple. Apple's now all-time highs. We used to have some nice opportunities on Google. Google's now all-time highs. The only one that's left that hasn't put together the monster rally that it should, in my opinion, is Amazon, which is why I'm playing this one so heavily on this pullback. Moving on to Google right now. Speaking about names that have been performing well but a bit weak recently, Google, right? Daily downtrend right now. We will see if the bulls are able to get this back, but we were big daily overbought conditions on the RSI. And we were also big overbought conditions on the weekly RSI into the 80s, which whenever it happens, historically at least, Google does tend to have several pullbacks ahead of it. That being said, we are in one now. If the pullback continues, maybe a logical location would be back down to about 230, 225. In terms of the 12 EMA, because the bulls really didn't set any support levels on the way up. So that would just be a tentative level to maybe take a look at, because in the context of a bull run, you usually want to watch the 12 EMA. It's your short-term momentum guide. So Google, not looking too bad, but it's really tough to position for some swing trade longs up here. In terms of adding Google shares to a long-term portfolio, the valuation up here is still not very rich. So if your time horizon is like 5-10 years, then it does make sense to add some shares up here. But for some swing trade longs, to start them up here, guys, you're pretty extended right now, and I would enjoy more of a pullback to take that type of trade. Moving on to Meta right now. Meta. Now, this is a very nice opportunity in my humble opinion. The bulls have lost pretty much all of their ground since the earnings release last quarter. That being said, the next support area below us is 707 down to 680. This has been an area that I've been patiently waiting for, and now it's finally here. So you will be seeing me add some Meta shares down here and possibly even going for some swing trade longs in that level. We are currently on the way to daily oversold conditions, and you guys know what I love best, confluence. If I can find a big key support level and also have daily oversold conditions, that is what we like to call confluence. And at the end of the day, what are we looking for here, guys, on the monthly time frame? Looking for a monthly higher low. So as the bears currently drop us into these key levels, I will be buying, making these monthly higher low attempts with them, playing off of support and also playing off of possible daily oversold conditions. I think Meta is going to probably have some fantastic earnings, so I want to make the most of these dips while they're here, looking not too bad, all things considered. Moving on to another good stock, Microsoft trying to break out from its recent consolidation range. So this one right now, they tried for the daily option a few times, got rejected. Now we are peeking our heads above the resistance range, not looking too bad. The higher lows, I'll remind you, are down here at 505. So the bulls currently looking to establish control again on the daily, but also maybe even the weekly, right? We were anticipating maybe just a one and done and just a rally. Apparently, though, they want to get it done in 2 stages, reacting beautifully from the 12 EMA, which is this yellow line right here. I'm sorry, I know I have a lot of yellow on the charts, but Microsoft not looking too bad. If I had to do a swing trade on Microsoft, it's not my favorite name, but there are 2 very clear levels to base our trades off of right now. Stop loss below these lows right here, because if you lose that, those unfortunately are not going to be the actual lows of the stock, right? We can drop a lot lower and revisit these. So if we wanted to make a play for the upside and say, listen, the thesis is for new weekly uptrend expansion and possibly revisiting the all-time highs from last earnings, stop loss goes down below there, and then your expansion targets should be close to the all-time highs 550. That's not a bad risk to reward for a short duration swing trade. In terms of adding some long-term shares to the portfolio, not the biggest fan above 500, guys, because Microsoft valuation is on the higher end. Moving on to Netflix right now. Netflix down 2.34%. This one too is starting to be another attractive buying opportunity across big tech. So you can see, guys, there are many attractive opportunities right now, depending where you look. AMD is decent, Amazon is very good, Meta is starting to be really good, and now even Netflix is starting to be quite attractive. Down here, we just broke our infamous 1185 range of support that the bulls did a good job holding for the past month and a half, but now no longer. So now we're going to test the bottom end here, 1154 down about 1112. This is the buying area that I've been waiting for to accumulate a few more Netflix shares. Sadly, the bulls losing the weekly uptrend attempt, going a bit lower, and as a result, your monthly consolidation will simply continue. If we make our way to the low 1100s and kind of meet up with this monthly 12 EMA, I've been a big fan of buying Netflix pullbacks to the 12 EMA on the monthly every time they've happened, and I will be probably doing so again. So keep an eye out for those levels, guys. 1100, low 1100s, right? Moving on to NVIDIA right now, this one is looking very solid for a breakout. Daily uptrend is clear as day, breaking out of the top end of 183 and now sitting slightly above that. If you get a possible back test, great location to enter. Now it's just a pure breakout trade. That being said, on the weekly, looking really good. We had the weekly uptrend. We never lost it, right? Beautiful weekly uptrend formation. And now looking for a bit more. Your upside target on NVIDIA at this point in time has to be 200 psychological. So I'm not the biggest fan of playing the actual breakout trades. I'm a bigger fan of playing the support level back tests. But if we wanted to play the breakout trade right here, quite simply the take profit area would be around 200, maybe just a sliver above that. That being said, the risk reward is not the best, right, on the weekly, because where's the stop loss, right? Well, we can't really put a stop loss below the weekly lows. It would be too low. So it would have to be this guy right here, right? 173 would be the stop loss area, take profit above 200. But you guys know that's not very good risk to reward, right? Perhaps if we can make a bit of a extension move and then back test this location right here and then start to ramp, then we can have a tighter stop loss, right? Because we're not sure if they're actually going to go for the full breakout right now or if they have to pull back one leg further. That being said, in around 175, not too bad. The valuation was fair in my humble opinion, which is why we were playing so much NVIDIA when it was at the lower 170s, high 160 range. Moving on to Tesla right now, Tesla up 3.31%. Tesla is possibly going for a brand new all-time high soon. All-time highs 485, that's the next area, because right now we're pretty much through all areas of resistance. The bulls are looking extremely, extremely strong right now. Still pending those delivery numbers, should be coming out pretty shortly. I'll probably have to talk to you about them next week perhaps, right? That being said, looking very strong here. Daily higher lows are set at about 420 still. Any move lower, looking for a new higher low for possible further trend continuation. Tesla bulls have been waiting a long time for this one, a very long time, and I've had to sit through so much volatility this year. So congratulations to all you Tesla shareholders that were able to hold firm on your long-term thesis, despite some of these short-term negative catalysts that we had described on the channel previously. Looking very good though. Tough to position up here for a swing trade, guys. I'm not really interested, but I do still have my some of my long-term shares from Tesla, of course. Moving on to Palantir right now, Palantir up 1.39%, and kind of the same thing as we've described previously, to where when stocks are near their all-time highs and going for the breakouts, it's just really tough to position, right? The last swing trade opportunity for Palantir, we talked about it, was the breakout retest and then the run, right? The retest levels are the ones that I'm interested in playing, not so much the breakout levels, although they can be fun and very volatile, just not my style personally. That being said, beautiful daily uptrend is currently still underway. Your higher lows are set at about 174. If you lose this, right, and go into a daily downtrend, well, as a matter of fact, all you're looking for here, guys, is just a new weekly higher low. The bulls have pretty much recaptured most of this weekly decline so far. If we have to tighten up before earnings, that wouldn't be so awkward, but I would also not be surprised in this current market if Palantir just goes for it, man. 189 is the next stop, and thereafter you would have to use a psychological 200. Very tough to position up here on Palantir, both for shares for the long-term portfolio, because it is expensive unless you have a 5+ year time horizon for them to actually grow into their valuation. But also for some swing trades, guys, it's a little bit tricky unless you're keeping a really tight stop loss and going for big expansion, right? But the risk reward profile is kind of similar, right? Because if we enter long here, 186, our stop is like 173. That's 13 points. Where's our upside target? 200 psychological. That's like 15 points. It's a one-to-one risk to reward. Not my favorite, but Palantir looking still very strong. This is another name now that is finally offering some opportunities. SOFI, right? So you can kind of see a common theme when I go through the charts right here, right? I'm not a fan of chasing the breakouts, but what I am a fan of doing is waiting for those breakouts to then possibly result in maybe some retests of some key support levels left behind. 24 down to about $22 is that range on SOFI. And a whole bunch of people were asking me up here, is it too late to position? I was saying, well, I'll just wait for the higher low retest. If it doesn't give it to us and just blasts off, no problem at all. There's other stocks to trade. But now that it's offering some retest conditions, I'm willing to play SOFI if we get the backtest down here, 24. As a result, I'm playing this a few different ways. Number one, selling puts down here, right? And trying to collect some premium. If I get assigned, no problem. I'll be able to ride the shares for some decent profits and also using some covered calls. But if we come back here, it might be a very decent location to possibly load up some swing trade longs as well. Maybe using some call options or some call debit spread. So I'll be paying attention to that too. We were deeply overbought territory on the weekly RSI. That has now since cooled off. And all we're doing right now, guys, is maybe looking for a little bit of monthly consolidation. So if I see it down here, 24 to 22, I'll be a big fan of participating because the valuation at 25 or under is still very fair for SOFI, but this is just some much needed, very healthy consolidation in my humble opinion. Moving on to our next one, which is going to be Uber. Uber was down 1.39% and currently not able to break and close above the $100 range. Now, the daily higher lows are set 95.88. If you lose that, sadly, it's a new daily downtrend, and we're just going to head right back into the infamous area of consolidation, 93 down to 90 bucks. Now, the weekly bulls are not looking too bad. We still are maintaining this beautiful weekly uptrend. So if we come down a little bit more, you will find me selling some put options down here, and maybe even adding some long-term shares to my Uber position as in the lower 90 range. The valuation is still very manageable, and they are growing monthly active users and their mobility and deliveries business at a very fast clip. And also, we're doing a whole bunch of buybacks too on Uber. So I will be a big fan of playing this lower 90s or maybe high 80s area if we do backtest into it. Moving on to TSM right now, the stock that just keeps on flying almost every single day, up another 3.29%. Fantastic move on TSM right now. But as I've been saying, very tough to chase, right? The area that we've been talking about in August, you might remember this entire zone. I was saying it's a decent opportunity to be adding some TSM, decent opportunity to be looking for some swing trades, adding to some long-term shares in terms of the long-term portfolio. That was the last opportunity, guys. At this current stage right now, we can't really chase it up here, can we? Breaking into the 76 RSI, which is overbought conditions there, breaking into daily overbought conditions too. So it's looking pretty overbought on all time frames. That being said, the bulls are in full control. Daily higher lows are set right now at about 270. Any pullbacks looking for new higher lows for further trend continuation. In the event that eventually we unwind and we go for a daily downtrend, because they do happen, obviously, right? Well, what are we going to be looking for here? We're looking for a weekly higher low. And at this point in time, we're probably not going to make it back to 247 to 240. That would be a pretty big sell-off. But maybe as the weekly 12 curls up, maybe we can come and tag this one, right? Perhaps back down to maybe like the 260 range and maybe establish a new area of consolidation similar to what we did back then. As of right now, TSM is gone. So as of right now, no swing trades on TSM for me. And also, sadly, no longer adding any shares to my long-term portfolio. That time is now come and gone, in my humble opinion. And now we just have to be patient and wait for other plays that are possibly pulling back into some support levels. That being said, that's everything I had for you guys for the overall index rundown and also big tech list rundown. So hopefully you guys now realize that we don't have to chase plays that are breaking out towards highs perpetually. They can be fun, but what I prefer is to wait for those same plays to consolidate, and that's when we play them. And then we ride the breakout rather than continuously chasing the breakout, right? And refusing to position on consolidation dips. We have some good names across this entire list, guys. AMD, beautiful weekly consolidation. Amazon, beautiful weekly consolidation, right? Meta, beautiful weekly consolidation. Netflix, looking really good too for some consolidation. NVIDIA just was in consolidation and was a great opportunity, now breaking out. And other names now too, like SOFI, beautiful weekly consolidation. So I'm a big fan of playing consolidation and not chasing the breakouts, guys. Always be patient and let the market come to you. Don't ever get married to one single stock. Eventually, yes, they all do break out, but eventually too, most of them do pull back. And for those of them that do not pull back and just keep running and running and running, it's fine. There's over 8,000 stocks in the market. You will definitely find something that'll be on a pullback that you will be willing to play. And that being said, let's move into our next section, the biggest gainers and losers of the week. And I'm going to show you even more charts that, in my opinion, are just not good to chase right now. All right, so let's talk about some of the biggest losers today, and we're going to be talking about Reddit. So this is a prime example of what I was just talking about, waiting for the market to come to you. A lot of people were asking me, can I buy Reddit all the way up here? I'm having some FOMO, and I was saying, no, just not interested, right? The valuation was really rich at that point in time, and now, just a few short weeks later, we are currently underway in a quite sizable pullback, right? Talking about from the highs to where we are right now, 30%. Very volatile company. The next area of support, because you just smashed through this one as if it wasn't even there. 224 down to 211. It wasn't the most strong. It wasn't the strongest area, right? Previous all-time highs and a bit of a back test right there. Now we might just be going for the bigger one, 175 down to 157. Now I will be looking to play this fallback area on Reddit. The news that was affecting the stock today for it to be down 12% was that ChatGPT wasn't so much relying on data provided, or rather found on Reddit, which gave people some pause as to maybe Reddit's data licensing business wasn't as solid as some people might have hoped. As a result, the stock was down 12%, and I will be looking to play this pullback area. As a matter of fact, I'm already playing this pullback area. I sold some puts today at 175 for next Friday. Fantastic premium, fantastic volatility. And at that point in time, Reddit will probably also be in deep daily oversold territory. If they do come down and pick me up down there, we might just be looking for a bounce location, which is the type of trades that I'm looking for, right? So Reddit could be a decent opportunity if we come back here. We covered them after earnings around 188 or under. The valuation was still somewhat manageable in terms of a forward PEG ratio. Price to sales was a bit high, but the company is growing revenue and EPS at very rapid clips. At 280, it was not a good buy, right? So hopefully that makes sense. I'm looking to play these pullbacks on some of these volatile names. Speaking about pullbacks, Mercado Libre, now its second day down. These are some of the biggest candles we've seen in the last 3, 4, 5 months of trading. Yesterday, down 6.5. Today, down another 6.85%. And it has to do with the news that's going around in Argentina right now. President Milei's government struggling a little bit. They lost a local election about a month ago. It caused some instability. Not passing, kind of like the US right now, government struggling to pass some spending bills. And we know that, President Milei has done a good job in terms of bringing inflation down in Argentina. However, recently with the instability, quote unquote, the peso in Argentina has been dropping a lot, which has potentially led President Trump to maybe extend a helping hand, maybe $20 billion worth of a helping hand to Argentina, possibly to help stem some of the damage right now. That being said, Mercado Libre's entire business is not in Argentina, but obviously when there's some geopolitical instability in one of their markets, it is going to affect the stock. What does this mean for us? I do think that it's a tremendous buying opportunity, as we are currently just still hunting for some monthly higher lows. Back down here, 2,100 down to 2,000 could be a fantastic area to load up on one of my favorite companies internationally. The valuation under 2260, we covered it after earnings, is fantastic. One of the best in the market for their current growth metrics, revenue and EPS. Fantastic, and all lines of their business, e-commerce and fintech, really doing well. It's just right now, nothing the company can do, right? It's not something that the company is doing wrong. It's just geopolitical stuff. And when that's the case, I do want to be a buyer because we know that that is temporary in nature. The company's fundamentals eventually will take over. You can see all the analyst price targets much higher than the stock right now. Look at this EPS ramp for Mercado Libre in the next few years and look at the revenue ramp as well. Revenue Matter of fact, will be more than doubling, and EPS as well will be more than doubling, almost tripling by 2028. So this is the type of sell-off that I do want to play. No options plays for me on this one. I'm just going to continue buying some shares, and especially down here, continuously loading up some longer term shares on Mercado Libre. Fantastic company, just getting hit a little bit to the downside. Speaking of other companies getting hit to the downside, Duolingo remains a very polarizing stock depending who you ask. Some people love it, some people absolutely hate it. I think it's not a bad buying opportunity down here, sub 300, let's call it 300 down about 275. Not a bad first location to buy. And thereafter, if you do plunge into the second location down there, 240 down to 220, decent. But we're talking about longer term shares here, right? Possibly for the fundamental expansion thesis of the business over the next 12 to 24 months. Not so much for some swing trade longs, although they could be interesting, but you got to go really wide on those, right? The stop loss would have to be all the way down there, 40 points below, and then you would kind of be targeting the expansion of a new weekly leg here, possibly all the way up to about 375, which is your upside resistance target. Moving on to new holdings. Nubank, same concept as Mercado Libre, being affected by the drama in Latin America right now, but it does not detract from what a solid company New Holdings actually is. Daily downtrend underway right now, and as a result, after this massive rally after earnings, you're finally getting some weekly consolidation, kind of like SOFI, right? So that being said, beautiful weekly uptrend. You guys know the drill. We're going to come back down here. 14.5, 14 is where I start bidding again. Going to try to get some shares or maybe some swing trade positions in, maybe using some short puts all on the way down. 14 down to 13 is really the best area, but I might be jumping the gun a little bit by doing something at 14.5 and then building position as we kind of backtest into that location. I've been waiting for this backtest for a while. Company's fundamentals are still very strong. If you look at the 2027 or 2028 bull and base case estimates, we have some pretty good upside left in this stock, so I do want to be playing the pullbacks on this one, especially ones that are not a result of a company's missteps, but maybe just something from the overall market drama that is happening right now in Latin America. Those are just a few of the names that I wanted to talk about. In terms of names to the downside, there's obviously many more, right? Robinhood, I know that you guys want me to talk about Robinhood every single video. There's just no trades up here, right? It's just very extended. We can't do anything up here other than buy and cross our fingers that we can basically sell our shares to somebody higher than they are today. But no decent backtest levels to be basing some trades off of. As a result, I'm not looking to position in Robinhood at all right now, either for long-term shares. I think it's probably too late at this point in time in terms of the valuation, and also for some short-term swing trades, there's just no levels, and I'm not in the business of chasing these to the upside, right? The last time to position on Robinhood was this breakout retest right here. We talked about it on the channel, or building positions down here, talked about that on the channel as well. But at a certain point, guys, you got to draw the line somewhere, right? And up here, it's just not best practice if you're doing that. Moving on to Circle right now, I do think Circle is a decent bet down here, 120 down to 105. We've talked about it many times on the channel. The reason being the bull and the base case scenarios for some expansion into 2026, 2027 are looking pretty good, right? The forward share price estimates are looking quite strong for the company. I know it's not been doing that well recently, but a decent zone of accumulation. And I've been building a shares position on Circle recently. Looking forward to buying a couple more if we do dip down there. Other companies such as MSCI, right? MSCI has been trapped in this range, guys, since like March. Sure, we broke down below with the tariffs. We broke down below after their most recent earnings, which, by the way, we did cover all the channel. Big overreaction in my opinion. But look at this consolidation. These are the types of consolidations on high quality stocks with large moats that I do want to play for some possible upside. Speaking about names like that, SPGI, still in a fantastic location, beautiful backtest location right here. 480 down about 460, great location, phenomenal support established not only this year, but this is the previous all-time highs from 2021. What has SPGI done since 2021, right? Has their business been falling or has it been improving? Well, number one, daily oversold conditions. That doesn't happen too often on SPGI. But when I backtest a level from years prior, the first thing that I always do is run the fundamentals, right? Is the company doing better or worse than in 2021? We'll look at their EPS, right? EPS back then, 13.70. This year, 17, 50% gain. What about revenue? Back in 2021, 8.3 billion. Now, 15. So I'm finding the same company at the same share price it was back then, with much better fundamentals. In my opinion, that is a buy. Moving on to Moody's Corporation, same concept, right? Although we're not backtesting the 2021 highs, in this instance, what we are doing is backtesting all of our support range from September of 2024. So Moody's Corporation here as well, 470 down to 451. Great pickup if this is the style of company that you're looking for. I know those aren't the biggest gainers and losers of the day, but I figured I should include them because they kind of go in line with MSCI as well. So those are all the ones that I really wanted to cover. Shout out as well to some of the healthcare names. ISRG, one of my favorite medical equipment players, probably a decent share position add. I mean, I'm adding some shares to my long-term portfolio of ISRG, testing some of the tariff lows, all while improving fundamentals. I think it's just a question of time. All we're looking to do here, guys, this one runs really hot, right? Has some huge legs of expansion and then pulls back to quarterly EMAs or even goes for the full monthly retracement back to like the 26 or maybe the 50 EMA as well. The company does trade a bit rich, but I am a big fan of buying in this location all the way down to sub 400 if it does happen. I think these buys will be heavily rewarded in the next few years. It's a phenomenal company. I don't talk about it that much, but you can tell by the analyst price targets here and by this beautiful and consistent EPS ramp curve, beautiful and consistent revenue ramp curve, which is about to embark on a new phase of growth, that this is a very solid company currently being sold off by the market. And I do think there's a discrepancy here and a decent opportunity to position maybe some pharmaceutical plays as well, such as Pfizer. Pfizer could be a lottery style play, just looking for some possible upside. We are now finally closing above, possibly, right, breaking above and maybe closing the month. We'll see, but it's certainly looking that way if the bullish momentum in healthcare continues. First time since 2022, 12 monthly EMA. They might just be going for it. Another fantastic, I'm not saying Pfizer is fantastic, but it could be an interesting play. Vertex Pharmaceuticals, this one as well, in a very nice range since 2024. Extremely solid company. Watch out for this one. Very easy level to play in my opinion. Stop loss goes down below there. And we're targeting all the way up here, excuse me, for some expansion. Merck has also gotten crushed this entire year. Look how far down Merck has come. Some swing trades on Merck, maybe not the worst position. It is a bit late after this week's massive performance, of course, but the upside targets are still a decent ways away. The next one would, of course, be back to the $100 range, and then you'd be targeting like maybe like a 115, 120. So not too bad for some follow through on some of these pharmaceutical plays. I know they're not everybody's favorite plays. I know maybe some people want to play biotech like LABU. If you're doing that, just be very, very careful with biotech, guys, right? That being said, that's most of the stocks that I wanted to cover. To the downside, now I'll be going through a lot of these names to the upside, okay? And I'll pull up the charts and I'm just gonna show you, right, what I'm not interested in doing, right? It's fine if you guys wanna do it. If you wanna play momentum, that's fine. But I'm pretty sure you guys who are recurring viewers on the channel, you guys know my style, and that's just not my style, right? It can be fun, it can be very volatile, but it's not my style. Playing ASTS all the way up here for a breakout, it's just not my style. The stock is up 16% today. Can they perform better? Can they keep going for it? Sure. But where's the stop loss? Stop loss is down below here, 47, the new daily higher lows. And where's our take profit? Well, the logical one is all-time highs, right? 61. Beyond that, it's blue sky breakout. You can't really tell where it's actually going to go. Looking maybe for a new monthly leg of continuation. I mean, I guess you can use the fib extensions on this one if you really want to, type of thing, right? Which would maybe put the stock, the next take profit target, maybe at $75 flat. So if you're doing something like that, it's fine, but it's just not my style, right? It just ran a little bit too much, a little bit too fast. The best opportunity was arguably down below here to sell some puts in the lower 30s or pick up some trades down there as we were looking for the monthly backtest. And we talked about this on the channel when it was down there, right? Those are the nice pullback opportunities when we get close to levels and build into the levels, right? Not so much chasing it up here when we're a bit late. SMCI, this one is actually not late. It could actually be a fun little trade right now. Just looking for a test of the resistance again, 56 all the way up to about $64. Not too bad on SMCI. Might just be part of the whole semiconductor broadening and expansion trade right now. Not too bad. I'm not gonna lie. I have a few shares of SMCI, but I bought them a long time ago, guys. I bought them like down here around $32, $33. So I'm just holding the ones that I had. I took some profit on them back here, and maybe the next level for me would be back to like maybe 75, 80, but I know that's not gonna happen right away, but not too bad. We covered them after earnings not too long ago, and we found that around $50, the stock was cheap despite the problems that it does have. Tempest AI, very interesting play, especially with what's going on with healthcare right now. Beautiful weekly uptrend, not gonna lie. Gorgeous weekly uptrend. Right now, positioning still a little bit late. Where were we positioning on Tempest AI? I'll remind you, back here is when we were positioning for the good old breakout, retest, and run trade. That was a fantastic trade. The stock almost hit $100 off of these back tests at 70. Those are some very decent profits. If Tempest pulls back again, maybe you'll find me selling some put options down here again. But all the way up here, very tough to chase unless you're using something like leap call debit spreads to really reduce the risk profile a little bit. APLD up 9% today. This one as well, guys. Just not interested at all in APLD right now. Playing pullbacks is fun, especially you can get some short puts with a lot of distance on it. But right now, APLD is a hold. It at the limit is a nibble, but is it a full-size position all the way up here, having pure FOMO because you see this ticker all over the place right now? Probably not. That being said, it did get a analyst target upgrade today to $43. So take from that what you will. In my opinion, it's a hold. The last true buying area for APLD was all the way back down here around 14. This back test of the prior range right there, right? Previous resistance and the back test of the 12 EMA, it's just very extended right now on all time frames. The daily is not looking too bad, I'll admit that. The next location, 22 down to 19 for a bit of a pullback. If we make a move back down into here, that could be an okay level to kind of start to play APLD again. But as of right now, playing the breakout trade, I mean, it's up to you, right? But as I said, it's just not my style. Same thing on Micron, right? Micron, we covered their earnings. They had fantastic earnings. Now finally putting together another leg of the rally. But can we buy it up here? If you're buying it on the valuation alone, right? As I was saying after earnings, it makes sense if you have a 12 to 24 month time horizon and you're going for the expansion thesis and you're not so much concerned about level to level trading. But for those of you that are concerned about level to level trading, how can we possibly position on Micron up here? Where is the stop loss? The short answer is you can't really do it, right? Maybe there was an entry after earnings, but then again, it was very dubious because once again, there was no clear stop loss. You were just basically buying after earnings and crossing your fingers that the stock would just continue to pump despite being in, weekly overbought conditions and also despite at that time being in daily overbought conditions too. So Micron right now is a hold. For me, it's no longer a buy. The buys were all the way down here. We talked about it many times on the channel. And a lot of our Discord members have been making a tremendous amount of money, and myself included on Micron. So I'm happy, but still, can I recommend that people chase this trade? Probably not. Eli Lilly right now. Eli Lilly, not looking too bad at all. If Eli Lilly gets a back test right here of like 780, that trade could be very interesting. And we might just be looking for the infamous channel breakout on Eli Lilly, right? It's a very messy channel. I'll have to adjust it a little bit, but you're looking for the possible daily downtrending channel breakout, looking very solid. I talked about it yesterday when the stock was up 5% yesterday. It was up another 8% today. We were saying yesterday that it was a pretty good buy in these levels, going for the breakout, and Eli Lilly, probably still one of my favorite pharmaceutical stocks in the market right now. Symbiotic as well is starting to run. This one, in my opinion, is not too late, but if you buy it here, you have to buy it with the premise of maybe having to DCA back down there into the lower 50s. That being said, the bulls are looking very strong, looking for the completion of the breakout pattern, right? Huge day to the upside. We were talking about it back here to where it wasn't a bad location, guys, because at the end of the day, we were just looking for some monthly pullbacks into the level for some expansion, and also the weekly time frames were showing the same thing, right? We kind of lost it after earnings right here. Big consolidation, big flush into the low 40s, and I was saying, into the mid to low 40s, you can get behind the valuation, and it made sense to build down there. Now, once again at 58, I'll remind you guys, once again, you are chasing. Can it run higher? Yes, but I want you guys to focus. Some of you guys that day trade, it's not that big of a deal, right? But when you're looking for trades like I do, the weekly upswings that can last for a few weeks, and we're buying these on the downswings to really go for the big amounts of profits, right? And as they run, I want you guys to focus on pullbacks, not so much playing breakouts and having FOMO, right? Because in my opinion, and in my experience as well, you can just put a lot more size behind trades in good pullback areas into support than you can ever put size into breakouts. Playing these breakouts will never feel right if you put a lot of size into them. You'll always be questioning the trade, especially when you really don't have defined stop loss areas, or the stop might be a little bit too far away and you know that you're late getting into the trade, right? That being said, we can talk about so many more companies on this list, but you'll see that a lot of them are doing the exact same thing, right? Datadog, in my opinion, guys, same concept, right? It's a little bit late to position on this trade right now. Intel, a little bit late to position on this trade right now. The last time we were interested to position on Intel was this back test down here. After the initial Trump, right, news, then the back test playing into support, that was the next good area. Up here, you're kind of chasing, but call debit spreads, leap call debit spreads, or leap call contracts at $40 and take your chances with the lottery. Not a bad proposition, but you are starting to get a little bit late on Intel because the fundamentals of the business have not turned around. It's just a bunch of bullish headlines, right? VRT, same concept. We talked about this one a while back, right? Going for the inverse head and shoulders. We talked about it the last 2 weeks. Now, this was looking maybe good for a breakout, right? Especially in this level, 130 to 120. Now up here, it's gone, right? What can you do? It's gone, on to the next chart, right? I'm explaining a lot of these charts to you guys individually, but when I look through these with my Discord members in the morning, it's very simple. I see a chart like this, next chart. I see a chart like LRCX, next chart. There's nothing to do here. There's just absolutely nothing to do here, nor for long-term share positions, nor for swing trades as well. So I just move on to the next chart, right? NVO could be a decent bid down here, just looking for the recovery of the entire healthcare sector. Although NVO is not an American company, it's not in the S&P 500. It might just be a case of rising tides lift all ships. NVO, not the worst bet. Nike, not the worst bet either. We covered them after earnings yesterday. We were saying that recovery story was well underway, and we do believe that Nike's bottoming out process was probably already completed, and we might just be here, right? We're not huge underway to the recovery, but we're here. At least we're not here, right? So Nike stock, not the worst bet if we're looking for some leap call contracts or maybe some shares. It will be slow and it'll be very bumpy. To quote the CFO yesterday, it will not be a linear recovery for the company. Companies like Applied Materials, right? You are late on Applied Materials. The time to do this one was pretty much after earnings, when the valuation was a little bit stretched, I'll be honest, but did make sense, especially in terms of price to sales and in terms of free cash flow yield. Now at 220, you're pushing the upper bounds of the valuation. This company does not have the same revenue and EPS growth metrics as some other companies do. It is low, so as a result, the valuation creeps up really fast when you rally that much from 160, where we did the valuation, to where we are now. That's 35%, right? So unfortunately at this time, AMAT, not a big fan of playing. ARM could be interesting, but the valuation on this one has always been very high. We covered it after earnings, guys, right? The valuation is really, really high on ARM, so it's not my favorite one to play, but if you squint your eyes, you might be able to see a gorgeous inverse head and shoulders pattern as well. Looking for the breakout. That one could be interesting, but if I had to play this one, I'd be playing with some small call debit spreads or things of that nature, right? Stock like AbbVie, what do you want to do here? It's gone, on to the next chart. MSTR, decent bid in my opinion down here for the recovery play of Bitcoin if you want to use it as a proxy. BLDR, this is one that we were talking about the last few weeks. I was talking about these, right? BLDR, decent bid down here, and also some of the home builders, the ETFs, right? Decent pullback for possibly the next leg of swing trade longs because they have the macro tailwinds of the rate cuts looking pretty good in that respect. Stock like ASML, gone, right? I mean, we talked about it for months and months and months on the channel. If you guys weren't able to position, it is what it is, right? But now the stock, $1,000, and now the stock is trading back into expensive territory. So am I buying ASML up here? No. Why? Because I spent a year buying it all the way down there. That was the time to do those things, guys. So hopefully with these charts, I show you what I'm looking for, right? VST, we talked about a few times. Beautiful pullback location, maybe to be building some swing trade positions. I like this one in terms of an energy play. I also like Next Era Energy for an energy play. That one is also starting to go for a little bit of a breakout here, but it's going to be a long duration play, right? Should I be chasing stocks like Bloom Energy when the chart looks like this, even though it's been going up and up and up and every single day, right? If you want to do that style of trading, you have to go very light and you have to just risk the amount of money that you're probably willing to lose. Either, I mean, playing just playing natural call options on these is very tough, guys. There's a lot of volatility, and the last thing you want to get hit with is back-to-back 10% day pullbacks playing weekly call options, right? But call debit spreads is the way to go because it lessens the volatility. Keep in mind, Bloom Energy right now, $21 billion company. Do the fundamentals make sense of this stock right now? Well, let's have a look at the revenue profile, right? Well, in this year, 1.76 billion. Next year, 2 billion. It's an energy company trading at 10 times price to sales. Most of the revenues will be coming in 2027, 2028, but you're kind of pricing all of that in right away. So are you getting a good deal on Bloom Energy right now? The short answer is no. I'll be waiting for some extended consolidation on this one. And in the meantime, I'll just be playing so many other great companies that are in pullback levels. I'll remind you guys, always let the market come to you. You do not have to chase. You do not have to play all of these companies. I know the gains can be very alluring, but it just takes you to buy at one bad location into weekly consolidation, and you'll really feel the pain, and it's really not fun, right? When you get into a bad habit of just chasing a lot of stocks, get caught up in the bull market that's very forgiving right now, right? It just leads to building bad trading habits, in my opinion. So I'll reiterate once again, you might think that it's boring, you might think that it's conservative, and that's fine, right? Conservative and boring also wins the race most of the time too, right? As opposed to just playing pure breakouts, pure super volatile stocks, right? That's fine if you have a small portfolio and you're willing to take on the risk to grow it really aggressively and things of that nature. All right, sure. I'm not gonna lie. I used to do that too when I had a small portfolio, because at the end of the day, you need some of these high growth plays and you need to take on some of this risk to maybe grow a little bit faster. But when you have like high six figures, guys, you cannot position into these things with size, right? I cannot put in, like with my portfolio size, my big portfolio, like what am I gonna do, right? I cannot put in, $40, $50, $60,000 of call options on things at 130, 150% IV. It just does not make sense. It's very risky. So as a result, I'm a big fan of playing pullbacks on high quality names that don't have the amount of IV, but names that I can position in with size, with good locations, and just with good trading habits that I've built over the years. So that's it for today's video. Hopefully you guys enjoyed. Hopefully you guys learned a thing or two. If it sounded too conservative and too boring, that's fine, right? That's just my style. And I'm not saying it's the best style. I'm just saying it's my style. And what I'm trying to do is for everybody who has the same style, just kind of paint a picture of what we should be looking for. If you guys want to do the day trading, if you guys want to go for the high volatility, high growth, high breakout plays, there are obviously many other channels for that, and I will refer you to them. But on this channel, we don't really do that. Here we just focus on consistent trading, consistent ROI, and building habits that you can scale into the six-figure range and not feel like you have to sweat, right? Not feeling anxious about your positions, and also getting some good sleep at night, right? So that being said, that's everything I had for you guys today. Hopefully you guys enjoyed. If you did enjoy the video, consider dropping a like. I'd really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. And last but not least, if you have any questions, leave them down below in the comment section. I'll be glad to answer you. And if you wanted to join us in the Discord and have access to my trades in real time, access to the private morning live streams where we trade live, you get access pretty much to me. You can ask me direct questions in our live streams or in our chat rooms, and all of my educational content. The link to our Discord is down below in the video description. Hopefully I get to see a few more of you guys in there soon, and if not, I'll see you right back here on the channel. That's it for me. Have a great rest of the week. I will see you personally on the Sunday Top 5 Options video. Take care. Peace.